Before we go further into today's video, I am not in any way a certified financial planner nor an advisor. This is me sharing my experience. I hope for those of you who watch this video, if you are in a similar situation, it will guide you in the right direction in a way that you need to carefully consider what will fit your own personal finance needs, the research that you need to do before deciding. So a little bit of a background. Back in 2020, when I first got my full-time job, I had monthly income coming in. I had to do all the things that has to do with adulting in terms of settling health insurance, whole life insurance, and the idea of having an endowment plan where I was forced to contribute monthly that will eventually pay me in my retirement days was something that I gladly welcomed at that point of time. I had zero knowledge when it came to investing, apart from the retail bonds and also cryptocurrency, which was an investment mistake I covered in one of the videos I'll link up above and down in the description box below. I had no other investments that I was holding at that point of time. But fast forward 2 years later, now that I've been doing a lot of research for myself, educating myself with various forms of investments, I realized that maybe the endowment plan doesn't suit my needs after all. The endowment plan that I hold, I'm paying $250 per month, $3,000 a year for 10 years until I'm 35 years old. So the total capital is $30,000. If you take a look at this table over here, this Google Sheet is the numbers that I've extracted from the summary in the policy documents. Looking at the surrender table, it is only at the age of 45. 20 years later, will it surpass my premiums paid in total, which was $30,000. I'm not looking at the illustrated investment returns as it is non-guaranteed and subjected to the insurance company at the end of the day. As I was researching on other people's experiences with endowment plans, I chanced upon this silly discussion that was going on, a person sharing his own experience based on an endowment plan that he holds. He said that he placed $10,000 for 5 years and upon 10 years maturity was told that he would receive 2% on his $50,000. I think one lesson over here is don't trust what you are told. Instead, look at the fine prints of what is in the policy documents. He further mentioned that he received a miserable 1% instead of what was promised in the terminal bonus as stated in the bonus statement on 31st December 2022. The bonus is cancelled upon maturity due to economy and funds performance, and he further shared about the experience that he had. So this stresses the part on why I don't look at the illustrated investments return. Instead, I'm looking only at the guaranteed amount. As the endowment plan is for my long-term financial plans for retirement, a thing that we have as Singaporeans is called our CPF. So I figured that it makes more sense for me to cancel this plan, use the annual $3,000 in premiums to top up my CPF SA account, which will give me a guaranteed interest rate of 4% to grow until I'm 55 years old, since I can't touch the endowment plan until much later when it surpasses the capital that I've placed in as well. Of course, I had to do the math and calculate whether was it really worth it, so this is what it worked out to be. The premiums paid to date as of right now is a little bit over $8,000. At 55 years old, if I surrender the endowment plan, I would have a guaranteed amount of $37,200. And if I surrender the policy at year 3, I cancel it, I'll get back $2,610. The net loss that I would have incurred is $6,390. So if I started to top up my CPF $3,000 yearly, the total capital if I top up from 01 Jan 2024 until year 2030 would have been $21,000. I compound it at 4% yearly until 2030. The amount would have grown to $24,642.68, and then I stopped contributing in 2030. Let it compound at 4% until I'm 55 years old, and at 55, that amount would have grown to $53,995.15. After also considering the losses that I've incurred from paying for the endowment plan, net I would have gained $47,605.15, which is more than the guaranteed amount from the endowment plan. The assumption for CPF SA account over here, I'm assuming that it will continually pay me 4% every single year until I'm age 55. So I've considered the advantages, or rather the pros over paying for the endowment plan. Number one is that the returns are guaranteed. There is certainty over the endowment plan for sure. CPF is something that the government promises us to take care of us when we retire, and this payout is something I know that I will get when I turn 55 years old or at 65 when I opt in for CPF Life. and it will help me to reach the full retirement sum earlier as well. I get tax savings from topping up the CPF account via the CPF RSTU. Every single year, you will get $8,000 in tax relief if you top up to your SA or your MA account. The next thing I want to evaluate is how does this also fit into my entire personal finance plan. So let me share with you a little bit more. The reason I'm able to come to this conclusion is because I have a clear picture of how my finances are like with the spreadsheets I created that tracks my entire net worth and monthly cash flows. I'm able to plan and ensure that every dollar has a use case and that my finances are optimized. Hence, annually, I will do the CPF top-up of $8,000 in addition to my recurring investments. In 2024, if you're looking to start tracking, organizing your finances with either an app or a spreadsheet, watch this playlist and this video, and if you'd like to use the same spreadsheet that I'm using, the 2024 version is currently going at 15% off. Use the code NEWYEAR15 at checkout. Every year when I do an update to my sheet, you get free updates as well. I hope this helps. As I mentioned earlier, the endowment plan works like CPF to me. It is for my retirement days ahead, and that is why it makes sense for me to cancel that, free up the cash that I would have been paying for my endowment plan premiums and put it into CPF where it will settle my retirement days. If not, I can actually use that amount, free it up and invest into other things like the S&P 500 portfolio that I'm building. There is also the Singapore stock market dividend income portfolio that I'm also building. I've been reading a few books and it really changed my perspective of how I view accumulating wealth and spending my money. I don't want to just save towards my retirement, of which during the retirement days we actually spend lesser than we do than in our 20s, 30s and also our 40s, where we are healthy, being able to spend on creating memories, etc. Of course, I'm not saying that you don't save for retirement. You have to balance everything out. Reading the book Die With Zero has really changed my perspective, of which I'll recommend to you guys who don't know how to balance between saving and also spending. Where is the right amount? It guides you to think towards how you want to plan out your entire personal finance in the different life stages that you progressively age towards. So this is how it fits into my personal finance plan, cancelling the endowment plan and then channeling that money to top up into CPF, which settles my retirement, makes sense for me. I'm not saying that endowment plan doesn't work for anybody. It can suit different people. If you belong to the category where you need to be forced into saving towards your later years, then yes, an endowment plan can suit you as well. Instead of squandering all of your money away as of right now, being forced to save towards your future is something that you need to do, then yes, an endowment plan can definitely work for you. Number two, it can also fit people who don't want to invest for themselves and you are not looking to start. Because at that point in time when I first purchased my endowment plan, I was looking to start investing. It was a mistake that I bought the endowment plan and then committed to it at that point of time. I didn't know better. If you're someone who is looking to start your investment journey, then push off buying an endowment plan. You can research, educate yourself into the various investments that you can do before committing to an endowment plan. I have friends who don't want to invest. They are just accumulating their wealth in a bank savings account and then saving for their retirement days. Maybe an endowment plan can suit you because it grows your wealth in a way that they are invested into funds, although yes, there are underlying fees, etc. as well. I'm not saying that endowment plans are all bad. They can suit various people's investment needs. Let me know what are your thoughts based on how I've evaluated mine and the decision that I've come to. If you have experiences with endowment plans, you have bought it early on, matured, had good experience with endowment plans, share with us in the comment section below. I believe it will help many others who are researching and are probably caught in the same situation that I am as well. This is all I have for today's video. I hope it's beneficial. It's something that I've put off talking about for a long period of time because I have only recently settled the thoughts that I have in terms of my personal finance plan. And this is all I have for today's video. I hope you enjoyed it. If you have any questions, DM me on Instagram or you can let me know in the comment section below. I'll see you in my next video. Have a great week ahead. Bye bye.